What's up, y'all? Okay, so today we have beginning to trade and best times to trade. So this one is going to be like our second to last video before we learn our actual like first trading strategy. And so yeah, so whatever. The next one is going to be basically entering on how to enter a trade. I said entering on how to enter a trade. I'm going. But basically just learning about entering a trade, stop losses, take profits, and everything, and risk to reward. You're going to learn about that stuff, whatever. So yeah, so basically to make it abundantly clear, basically a take profit and stop loss is, say you enter a trade right here and you're looking for the market to go down. Okay, so say you enter right here, you set your take profit right here and a stop loss right here. A take profit meaning you believe it's going down. If it goes down and hit this, you make money and you cool. If it goes up and hit your stop loss, you're losing money and you're not really cool. You feel what I'm saying? But yeah, so basically a stop loss is protecting you from losing more money than what you're willing to lose. Okay, that's basically what it is. But we aren't going to be learning about that today. So look, so yeah, so TOC, table of contents. Yeah. What are the time sessions? Okay, so look, you got your Asian, you know what I'm saying? Asian, London, and New York. Okay, so Asian 5 p.m. to 3 a.m. London, 3 a.m. to 8 a.m. New York, 8 a.m. to 5 p.m. Now, these two sessions, we're going to talk about these more, and we're going to be trading these more. And as you guys can see, you're gonna have to be up, around the time, around the time, the freaks out at night. Oh god, but anyway, yeah. So right here you have your true time sessions. Where now this is basically everything you won't be learning in textbooks or what a random trader is going to be teaching you. Right here, this is that boo boo. You don't want to. Hey, you ain't messing with that boo boo. You know what I'm saying? You ain't messing with that stinky panky. Okay, you want to be up in here, where it don't stink too much, but it's tolerable. Okay, so as you guys can see, the sessions are completely different. Um, the True Asian session starts at 8:30 a.m. and back here, I've been them textbooks. This motherfucker say 5. And down here 3:30, 3 a.m. 9:30, 8 a.m. Okay, so as you guys can see right here, we have dead gaps and we have a high and low reset for the 5 p.m. So basically, the Asian session is well, it has two sessions in one, but they overlap. So people just combine them into one and just say, boom, Asian. You know what I mean? So basically, it's the Sydney and Tokyo. I almost said Tokyo. I'm gone, but yeah, sessions. Okay. So look, dead gaps. You know what? Actually, I have a slide on that. Okay, so why do we have dead gaps? Okay, we have dead gaps simply because the market makers exchange positions and work on a game plan to trap as many traders as possible. So basically, exchanging, whatever positions, basically, say like a shift change or whatever. Yeah. So market makers usually have a set amount of contracts that they have to get or trap before moving the market in its intended direction. So basically, what they want to do is they want to take your money, bro. So look, basically, say the market is coming down hard, and then out of nowhere it shoots up. Basically, that's them, inducing traders to go downward and then shoot it up. That's the shoot up is the intended move. Okay, so basically coming down, trap move, intended move, where it shoots up, real move. Okay. So for example, some candlesticks have longer wicks than others for this exact reason. If the market is on an uptrend, sometimes you'll see a bearish candle with a long wick traveling downwards, while the actual trend is moving upwards, but they have one candlestick, that like shoots all the way down and then, comes up and closes, but it forms a long wick, basically. And so this happens because, they're trying to, just stop people out. Because basically a lot of people, are catching on to what the market makers are doing, and so yeah, they have to be crafty or a bit more crafty, but there's only so much they can do, especially against an experienced trader. It's gonna be hard to like fake them out. But anyway, so basically, some people, they have an intended direction. Like, say they knew it was going up, and so they hopped in and they put their stop loss a bit lower, but they see how it shot up, and it shot up, good or whatever. So some people set their stop losses to break even. Break even is basically where you don't win money and you don't lose money either, because you put your stop loss where you entered the trade basically. And so basically that's them, coming down, hitting that, and then shooting upward continuously, so they can take them out the trade, because a lot of people already know their intended move. And so that's why sometimes you may see like candles like that. Also, some people may have just entered and have a stop loss down there, and they want to stop them out and take their money as well. Okay, so yeah. So best sessions to trade. So we have the London and New York session first. Okay, so this is when heavy moves are made within the market, and the most money is exchanged. Down here, Asian, like I said, like it's there, but it's kind of not. But you can trade this if you want to. However, it's not recommended because it barely moves. Okay, so your typical Asian session is at least movement of 25 to 50 pips, consolidation, in a sideways movement, which is consolidation. Remember this word right here. This word is a keyword. It's going to be used a lot. Basically, we have uptrends, downtrends, and consolidation, which is sideways trading. Okay, so basically, they may go up once and then go down, and then boom, that's your Asian session. Yay, for 25 to 50 pips, they don't really move that much. And sometimes it's lower than this. You know what I mean? Or sometimes they may actually, really go sideways, whatever. So, how to identify the sessions? How do we identify them? We know them, but we don't know how to identify them. So basically, you're going to have a session indicator, courtesy of Big Soldier. You feel what I'm saying? But anyway, look. So right here is basically, just telling you what you're going to be looking for. Blue box, Asian, red box, New York, and London is in between. However, it can be identified with two gray boxes on the top and bottom of the session, indicating you're in London. Okay, so this is a nifty or crafty way to remember each session if you guys so desire. Okay, so basically a chart example right here, we have blue box, Asian, two gray boxes, up and down, London, and then you have this red box, which is the New York. Okay, oops. See, Asian, London, New York. Basically, London is in between these. Okay, and as you guys can see, Asian, consolidation. Actually, this one kind of shot up. Well, actually, it's a little sideways right a little bit, but consolidation, it doesn't move, but y'all get your big moves. You see what I mean? Also, you see that W and then that M shot down, whatever. M right here as well, whatever. Straight away, whatever, W a little bit. But yeah, so you get your moves, in like the London and New York actually. Okay, so this is just accumulation. This is where they basically the market makers basically come in and make their game plans about what they want to do. As you guys can see, they push it up 1, 2, 3 hits to the top and then bring it down. Okay, so yeah, so it was something else I wanted to tell y'all. Oh yeah, so these gray boxes are called the stop hunts as well. So that's something we're going to be learning about as well. Basically, all of this ties in with the market makers trading strategy. I'm going to like tell you guys about or whatever. But yeah, so if it goes up here, typically you're looking for it to just shoot down heavy, and as you guys can see, this is the stop point. The bottom is 25 pips off of this box right here. The top is 50 pips off of this box here. The bottom right, well, the top down here 25 pips. The bottom down here is 50 pips from this point. Okay, so yeah, so also these numbers right here, these tell you how many pips it moved this session. Okay, 36.29. You don't really want to be trading this session. Okay, but as you guys can see, it was something else I was gonna tell you. Oh yeah, also uptrend inducement, uptrend third day, get your down, and then some people may believe it's going to go back upward. However, as you guys can see, it breaks this little trend line. I wonder if I can show y'all this. Actually, I'm gonna just wait to show y'all whatever later. But as you guys can see, this is what I mean by, you know, just maybe downloading the platform and just setting it up how you want it to look, because this is how some of my charts are. Some of my charts I don't have, you know, these session indicators. You know, some of my charts are like this. Some of them, you know, are just different. Just set it up how you want it to be, how you like it to be. You know, if you want it to be, you know, more, you know, just colorful, you know, vibe with it, whatever. You know, it doesn't have to be like this, because I'm going to give you guys templates that like may start out like this. It doesn't have to be like this. You can always change it. Okay, just, you know, find something that works for you, basically. Okay, and as you guys can see, we have the Asian, London, New York, W right here, shoots up, whatever. Yeah. Now best trading days. Right here we have the best trading days. Sunday is when the new week starts at 5 p.m. Sunday. On Friday at 3 p.m. the week concludes. Actually it's about 5 p.m. However, I've noticed that, you know, it like kind of actually like stops at like 3 p.m. So yeah, that's why I put 3 whatever. But anyway, and actually really it opens about 3 or 4 p.m. you know, on Sunday as well. So yeah, so actually whatever, do with that what you will. But Sunday, Monday, and Friday, notice I put Sunday/Monday because Sunday around 5 p.m. It heads into Monday, and so this is basically considered one day. Okay, Sunday, Monday, and Friday equals trap days, and so these are your real life days. Can you trade on these days? Yes, you can. However, this is typically when they like to like fake a lot of people out. Okay, so basically what I mean by trap days or like trap moves, because from this point on you're going to hear me talk about this a lot more. Trap moves and trap days typically happen at the start of a session or the start of the week and the end of the session or the end of the week. Basically they want to trap you, so you know next week or you know the next session they can come out and you know reverse it and then take your money, because all they want to do is boom 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 boom, then then take your money. You know what I'm saying, bro? But then Tuesday, Wednesday, and Thursday you get trending days. I don't know why I said trending. I just put trending because I don't know, it sound cool. Okay, so these are gonna be your green light days, bro. So yeah, so basically green light because you know you ready for them. You feel what I'm saying? You Kobe Bean. Red light days you ain't ready for them. You Kobe Bean with bad knees. Okay. You know what? No, I'm gonna say LeBron because I be seeing like LeBron iced up a lot more than Kobe. Yeah, I'm gonna say LeBron, and LeBron be having like a lot of injuries, bro. I don't know, but yeah, whatever. Yeah, so basically, just remember these days as, you know, the days you want to be on the lookout for. Now, I've recently started trading like Mondays and Sundays because, for one, I ain't no bitch. You feel what I'm saying? I ain't no bitty bitch. And Friday, I haven't really done it Friday. I might, I don't know, depending on how I'm feeling. But yeah,